night.
Thank you. It was nice talking to you. I learned a lot.
And for you, anytime you need something, you let me know.
Yep.
For real.
Hello, I'm Krishan, and I'm going to be partnering today with Gwen from Prosperity Mortgage, talking to you guys about mortgages today. So let's get into this. Okay, so Gwen, tell me a little about yourself and about your role at Prosperity, what you do from day to day.
So day to day, it's different every single day. I'm a mortgage banker. I've been in the business since 1986. I've been with Prosperity for the last 3 years. As a mortgage banker, my job is to give customers options on mortgage products that are available to them based on their credit scores, based on the down payment, based on what they're looking for.
So as a home buyer, what do I need to qualify for a mortgage? What kind of things do I need to worry about or have together before I come into your office?
The one thing that sounds like, when I'm talking with customers and I ask them what their income is, you'd be surprised. People don't really know what they make. They'll say, well, I bring home this, or I bring home that. So their gross monthly income is very important because that's what mortgage uses. We don't use what you bring home, we use your gross monthly income. Or even if you're an hourly, if you know your hourly rate, and then how many hours you work, because we're going to assume 40. Mm-hmm. If you work 36, like some nurses and people in the medical profession, they only work 36. That could determine whether you qualify for a purchase price or not. So we really need to know the hourly rate. We're looking for a 2-year history. We're looking for a 2-year history of where you lived. We're looking for a 2-year history of where you worked. And that is key when you're filling out your application. And then after that, we're looking at your credit scores. And not only your credit score, but what's actually making up that credit score. If you have bankruptcies, if you have foreclosures, if you have things like that on your credit report, that could determine, even though you have a credit score, those items may preclude you from being able to get a mortgage.
Let's say I want to buy a house in the next year or two. What can I do right now to prepare myself to be ready to qualify?
Save money. Keep your credit tight. One thing I tell people, even with down payment assistance programs, 9 times out of 10 you're going to have money to buy a house. There's so many upfront costs that occur even before your mortgage day of closing. You're going to have your earnest deposit that no one's going to take their house off the market unless you put some skin in the game. That can range anywhere from $500 to $2,000 depending upon the house, or more even. You're going to have money for inspections. You cannot buy a house that has not been inspected. You want to have some inspections. That can run you from $400 to $500, sometimes $600 for an inspection. A whole house inspection with radon and all that could run into the $700 range. So you want to have that. You're going to have most banks, credit unions, mortgage companies are going to want what's called an application deposit. That could be for your appraisal or what have you. That can range from $550 to $750 to $1,000 depending on which institution you use. So you have to have all those upfront monies set aside. Even if you're getting down payment assistance, it's going to pay for your down payment.
Okay, so
is that too much?
No, that's perfect. Okay. So what are some things that, let's say so now I've found this house and I'm in contract with it. I'm in the process of getting everything approved and everything. What are some steps that I need to do to make sure that everything goes through and I don't get any hiccups in the process?
First of all, you need to allow your lender to get all your documentation as soon as possible. The last minute changes is usually when we run into issues. So if you said, like I said, if you said you make X amount of dollars and you give us a pay stub that's totally not what it was, then that could create an issue. Mm-hmm. Whereas when you're getting pre-qualified for your mortgage, most lenders will send you a list of documents that you need to provide them as soon as possible. So that before you even write an offer, we really truly have a good picture of what your situation is. You'd be surprised how many people, again, their income is different, or they start the process, and then there's something that pops up like a judgment or something like that, because judgments and liens don't show up anymore on the credit reports. So we have no way of knowing that. We ask a question when you're completing the application, but if you don't answer that correctly, we're going to find it. Mm-hmm. Anything that you do will be found.
That's good to know.
Everything is going to come out in one way or other. Every mortgage company runs what's called a fraud report. The fraud report will list every address that you've lived in the last 2 years or more. It's going to list every job that you have. It's going to list inquiries that you've made on your credit report, and all those things have to be addressed. And if you open an account but didn't disclose it, we're going to find it. If you're in the middle of the mortgage process and you go out to Nebraska Furniture or somewhere and you apply for something and you open an account, we're going to get a notification of that.
So we should tell you ahead of time before we do anything.
Absolutely.
Okay.
Do not. We're going to tell you, don't open anything. Don't go out and buy a car. Don't do any of that. But if you let somebody run your credit, 9 times out of 10, you're applying. Don't let them run your credit.
FHA and conventional loans. Those are the two big ones right now. What's the difference between them, and why should I get one versus the other?
So each loan product is based on a lot of factors. For a conventional loan, you usually have to have a higher credit score. You usually have to have lower debt-to-income ratios. It's usually they're looking more at your assets, how many payments you have after you close, what's your reserves, that's considered reserves. Conventional is a little more difficult to get. FHA is more lenient. You have a lower credit score threshold. You have a lower down payment, technically. There is an FHA. The FHA is 3.5% down, minimum. There is a 3% down conventional, but again, you usually have to have a 680, 700 credit score to qualify for that. Whereas with FHA, with the 580, you can qualify and still put 3.5% down. So that's the difference between, it's just a little more lenient product.
Okay.
On the FHA, the VA, the USDA, those are more lenient than your conventional.
All right, how much do you recommend that home buyers put down on their house?
So I recommend you put down what you're comfortable putting down.
Okay.
Okay. The concern right now is that we're in these situations where when someone write an offer, there might be 4 or 5 or 6 or 7 offers on that same property. So a lot of times the seller's agent is talking with their sellers, and those with less down payment are looked at less favorably.
Okay.
So if you're only putting 3% down versus the next person's putting 15% down or 20% down, the seller's perception is that that person who's putting more down is a stronger buyer. Not necessarily true, it's just a perception.
Okay, so with FHA and conventional, do you see more issues with FHA going through versus conventional going through?
Absolutely not.
Okay.
Absolutely not.
That's good to know.
So, like I said, when we underwrite a loan, we give you the criteria. It's an FHA, as far as lending is concerned, an FHA loan is just as good as a conventional loan. It's the seller's perception when they looking at different multiple offer contracts or contracts. And now the appraisal criteria is a little different for an FHA versus a VA. So a lot of times if there's issues with the house, the seller may say, well, I will only accept conventional approved or conventional pre-qualification letters because I know I'm not going to fix this, I'm not going to fix this, and I'm not going to fix this, and that's what FHA is going to require, or that's what VA is going to require.
So what are the pros and cons to using like a bank versus going through a mortgage lender?
Money is money. So all of them are good. The issues are the service levels.
Okay.
A bank is open 9 to 5, Monday through Friday, Saturday from 10 to 2 or 1 to 2 or 9 to 2. Trying to reach a loan officer after those times to talk to them if you're having an emergency situation, probably next to none. Whereas mortgage companies, we kind of work 24/7. We work when you need us to work. So, it's nothing for me to get a call at 10 o'clock on a Sunday night. Or last night I got one at 10 o'clock. It was Sunday last night. So I got one yesterday at 10 o'clock. Or a text at 10 o'clock. Or you're out showing properties as a realtor and you need an updated pre-qualification letter. You're going to want somebody who can do that for you right then and there, especially in the seller's market.
Yeah.
You're not going to want to wait till Monday at 9 o'clock to get somebody to move. You're going to want somebody to do it right then. And that's the difference between mortgage companies and banks and credit unions, because they have fixed hours, whereas mortgage companies are we work commission-based pretty much only. And so we know in order to maintain relationships with you guys, we have to be there and we have to be ready to rock and roll. Thank you.
And how can people reach you directly if they want to talk to you?
Well, my website is www.gwengoins.phmloans.com. And that's the best way to get started with the whole process. The website has all kinds of information, has mortgage calculators, it has everything. My cell phone is 765-274-6366. That's usually the best way to reach me because I float around between different offices. Just anytime you have a question, you can text me on that number as well, and I'll answer you as soon as I can.
Awesome. Thanks for talking to me.
All right.